global economy goes through a period of uncertainty, investors are looking more keenly at emerging markets which are flush with opportunity. To understand the bets being made in markets like India, I caught up with a man who wears many hats. Formerly the head of research at Ashmore Group, Jerome Booth went on to start Newsparta Limited, an investment firm that has bet on a clutch of businesses in the UK and India today. Given that he's also an economist and author of Emerging Markets in an Upside-Down World, I began by asking him what's really luring global investors like him to India.
I think it's wonderful to be able to invest in India. I mean, first of all, I have to be humble because I'm a visitor, here, and I don't want to sort of say things which are impolite or anything. But there are always ups and downs. And one of the good things, one of the reasons I'm here, is because I'm allowed to invest now 100% in a company, and that I wouldn't really be doing what I'm doing without that. So that's an important piece of change. The huge deficit really in India is in infrastructure. But also in social indicators. So there's health, education, status of women, the sort of social indicators. These are the huge big problems, and those probably not spoken about anything like enough. And what's really interesting about all things digital is you can start to reach people all over the country, and that's really exciting.
Okay, so
that's one of the reasons why I'm here.
Okay, so I'm going to take a step back, obviously, and that's given me a cue. So when you are looking as an investor, because you wear so many hats, are you looking at an investor through an economist lens when you look at India? Because that's an interesting piece, because the conversation that we are having about the need gap and how it can be filled is not something that a normal investor would look at. He would look at where are the fastest returns, where can I get a 9x return. So my question to you is, are you using the lens of an economist when you're looking at opportunity in India?
Yes, I am, but I'm also seeing useful things to do at the same time. I think very much India has enormous potential, and the really good thing about the Modi government, by the way, is not the party politics. It's the fact that one government has the ability to act because it's got a majority, and it looks like it's going to be there a while. And I think it's that which has created the momentum to do lots of things which everybody's known need to be done for a long time. And so we're at that period, a bit like '91, where there's a surge of a national policy. Really, this is not a party political thing. The whole nation is behind doing something about these urgent needs in infrastructure, but I think also on the social front. As an investor, I'm looking at a market which is starting to enable me to invest. And so, yes, I'm interested in areas which generate completely new revenue streams, in technologies which can be adapted and can have a sort of viral impact very, very quickly. And that involves what we're doing in telecom space, in basically Digital India, which we're supporting with our acquisitions in the areas of Wi-Fi hotspots. We want to look at more. I've got some ideas for investing more in India in the areas of content and e-commerce and fintech. These are all complementary areas.
So when you're looking at investing in India, what are the verticals or the themes that you like? Are you looking at digital? And if it is digital, what do you like? Is it the fact that India is becoming a hotbed for a lot of innovation, a lot of low-cost innovation that can touch masses? What are the themes?
I think the market is huge, and the ability to market test product is enormous, and you've got all sorts of different demographies here. But it's also very much because I've come in, as a multinational telecom company, not as a financial investor. And actually that's a very different experience, which I could talk about. I mean, coming in my previous incarnation as a sort of private equity investor, it was very different. Now I'm coming in, the last trip, not this trip, but the last trip I came to, I think 18 people with me, all telecom experts. Private equity investors don't have that resource. And so I think there's a gap between how traditional financial investors come in and what multinationals can add. They can add value because they're coming with sector-specific experience and expertise, which can help. And that has opened doors for me. I've been able to get access to potential acquisition targets which perhaps I wouldn't have seen.
Which is interesting, because I am going to ask you about this. You have invested in a lot of Indian startups through New Call rather than you as an individual.
Yes,
what is the rationale? And this possibly explains that, because elsewhere in the UK, you have invested in multiple verticals as an investor.
Well, what I've done is I can't micromanage all these companies. So what I do is I want to support entrepreneurship. So I find companies that I think there's an opportunity, and basically I enable the entrepreneurs to have some equity, and then I finance it with debt from myself, such that when the debt is repaid, if the company does well, the entrepreneurs still have a lot of upside. They're not being diluted by lots of issuance of equity, and that way I have my interests aligned with theirs. So yes, I've done it through Nucall, but then I own Nucall. So it's whether it's Nucall or me as an individual, economically it doesn't make a lot of difference.
It's rooted through a telecom company which has the expertise and the wherewithal, and that is why you're looking at that particular work.
That's exactly right. So and the other businesses, by the way, a lot of them have big synergies with telecoms. You know, it's mostly TMT. So I've got some content. I have 4 movie businesses. I have some journalism. Largely in emerging markets, but not here in India. And these businesses obviously work together. There are big synergies between having, if you like, the pipe and then having content which you can put down the pipe. And so there is a logic to that. And whilst a lot of them are based out of the UK, my passion is emerging markets. And so that's why actually, you know, I put a lot of time and money into India.
Digital India is a big theme, and I think it is also being fueled by a groundswell of great ideas and innovative entrepreneurs who are really changing the landscape. There is the top-down pressure from the government with a vision statement and a bottom-up kind of pressure from entrepreneurs. Where do you see opportunity, and how do you see this piece evolving?
Well, we've got to do several things. You know, we've got to, as I said, enable entrepreneurs. So you've got to have net neutrality. You've got to have the ability for entrepreneurs to sort of get on with it without PPPs and, you know, too much bureaucracy or form filling and all the rest of it. And I think that's a very different role to some of the other infrastructure sectors. I think we're very fortunate here in the telecom sector and the digital sector in India, because regulation is, as it is in, say, in the UK, it's enabling. Rather than, you know, a huge amount of focus on government investment per se. Government has to think of, you know, the internet as part of infrastructure, and there is inevitably going to be, you know, a strong role for government in that. But you've got to remember also, this technology is changing very fast, and, you know, a lot of businesses touched by the app, you know, find that they're being completely disrupted. And you know, telecom in India is no exception, where you've got businesses that have really sunk billions into infrastructure, which now is great for voice, but not adequate for data. And so we need to do more, and we have to look at new ways to enable even existing big companies to reach their customer base. And that means things like Wi-Fi offload. It means you've got to use new technologies. And of course, if they're cheaper to deliver, that's where the new focus has to be. We are going to talk about this, but let me ask you, a lot of the digital ecosystem is going to be powered, according to governments, through a broadband network. Yes.
At a time when technology is leapfrogging, do you think this is going to be a limitation, and perhaps that this should be one of the many pieces, or not at all in the current context? Well, things move very fast, don't they? This is one of the issues, and so I think it's important to have government commitment. I think it's very important that we've got this statement of intent to help with the broadband network, and I think that's absolutely right. What would not be right, and we're talking about the future and the hypotheticals here, is for that to become sort of a rigid mantra which prevents other things as well. And I think I've no reason to believe that's the intention. So I think what's important is to not, you know, to see that as a start. You know, what we've got is the ability to transform the economic prospects for hundreds of millions of people. If we can get Digital India to really reach all the villages, you know, that's going to have an enormous impact. And that's the main focus, I think, of government policy. And you know, I'm absolutely up for making my contribution in any way, you know, in the way that I can to do that. But the last mile has always been the toughest to cover, especially here in India. So is this an opportunity for investors like Jerome Booth? Find out when we return. As the Indian government puts initiatives like Make in India, Digital India, Skilling India, and now Startup in India, one of the biggest challenges is to ensure that the real impact of this awareness reaches the grassroots level as well. There could be a huge opportunity here at the bottom end of the pyramid where the numbers are really big. Proof of this is the fact that increasingly businesses are looking deeper within India. So how are investors approaching this opportunity?
It's huge, but it depends on your time scale. You know, if I'm interested in making money in the next 12 months, then no. But if one looks over the period of time, if one looks over people's lifetimes, then of course. You can see in many examples how intelligent government policy combined with an investment atmosphere which really attracts not just domestic savings, of which they need to be directed more towards these things, but also foreign savings, all of which is very possible now. Over, say, 1 or 2 decades, you have people's incomes just massively increase, and with that comes purchasing power, and you transform the economy, and you also, of course, transform people's lives. These are not, you asked me earlier whether I was thinking as an economist or as a, thinking about social issues. Are these compatible? Of course they're compatible. There's no trade-off here, but it does depend on, how fast I want to do things.
Okay.
And I think one of the things
most investors want returns in the next 7-8 years. So how are you approaching investments?
Well, I hope still to be alive in 7 or 8 years, and a long time after that. I'm not so old that I've got a limited time horizon. And if in my previous job, when I sort of used to work for a salary, I raised money from institutional investors, and pension funds, endowments, their liability is 30 years. That's the money we need to harness. So if you've got a pension fund, in Illinois or in California, or a sovereign wealth fund who's basically investing over a 30-year period, that sort of money is the money you need to attract and bring into rural India. What I hope to do is not just put my own money in India. I hope to demonstrate that I can do this successfully, and then I can go and raise maybe much more money.
So a lot of money
and facilitate.
Sure. A lot of money is being raised from pension funds, etc. But a lot of those pension funds, when they route it through a venture capital fund, they also want returns in 8 years. So there is a dichotomy.
We're talking at cross purposes. A lot of money is not venture fund money. Okay. I'm not talking about venture funds. When I say a lot of money, Ashmore used to run $80 billion. Sure. Some of the mandates were several $1 billion in size. That is not venture capital.
Sure, absolutely.
This is a much bigger scale. And if India really gets its cards right, it can make a big difference. The sort of capital that a country attracts is very important. In the past, there was this idea that, one needed foreign capital because we were short of savings. Well, actually, that's not true of India, because India has huge savings rate, and as I was saying earlier, is exporting savings through its central bank. So what we're doing today, I suppose, is foreign investors are creating transparency, competition of ideas, and that improves governance. It can be useful because it creates liquidity effectively in markets, and that's useful. We need to go a step further, and we need to also bring the skill sets of multinationals typically bring, which is what I'm kind of very enthusiastic about at the moment. And into non-listed, pre-listed markets, private markets in emerging markets is where I'm really fascinated. But also, there's the question of, the sort of long-term money. What you want is long-term, non-levered money, not sort of so much sort of short-term, highly volatile, levered hedge fund money that might leave in a flash. And one of the real ironies of a lot of government policy towards foreign investment is the moment you try to put on lots of capital controls, you actually dissuade all the money that you really like, which is huge in volume, and what you attract is relatively small amounts of much more speculative money that get round your constraints anyway, the hedge funds.
Sure.
And actually, bizarrely, what you need to do if you want the right sort of money is you need to open up.
Sure.
And that
this
requires
gives a new dimension to it, because in this show I've been talking to people from different different pieces of the funding pie, from the venture capitalists to the big buyout. But this gives a new angle to it. But I am going to ask you, and one question that I've asked pretty much everybody on the show is that entrepreneurship is really hot in India. Everybody wants to do it. So I'm going to ask you, when you actually bet on an entrepreneur, do you bet on the idea, the vertical, the entrepreneur, his abilities? What are the metrics that you use?
Well, it's never simple, is it? What you do is you have to have a combination of lots of things. But actually, it's also about trust and relationships. If I see someone come in and just, an idea, that in itself may be interesting, but it's not enough. Entrepreneurs need space. They need to be nurtured. They need time. They need resources. So when I've done startups in particular, but also when I've bought companies, which need a lot of work or they need support. I've got a central infrastructure, if you like, so I can help set up businesses, write business plans, do the legals, all these sort of things. And then it's about giving the entrepreneur the rope and delegating. A lot of entrepreneurs, as they start off, they have to be very, very control fixated. They have to know everything that's going on. That's really important early on in a business. As a business gets bigger and bigger, you can create bottlenecks if that entrepreneur doesn't let go. And so there's a difference in management and leadership. So I'm kind of more on the leadership side, and I have to enable my managers. So what I'm choosing is people who, in their own right, are entrepreneurs, and that's not something that I can gauge. I can have a good idea. I can have a filter mechanism by meeting people and asking a few questions, but it'll take quite a long time to really get under the skin. And I have, so I look for people who are intelligent, yes, that I can understand. There's no point in investing in something you don't understand. And I'm the first person to admit I don't know a lot about. I'm an economist, so I have to rely on lots of people and lots of their businesses, which are outside my prior experience. But you also have to really give them the incentive pattern. So this is, as I was saying before, you have to align incentives so that you can trust them then. So, a lot of what's missing, particularly in larger organizations, is trust. People in workplaces all over the world feel like hamsters in a cage. Absolutely. And that again include really quite senior people. And I think if you can somehow break that down and enable people, and that's what really interests me. That's the reason why when I made my first lot of money, I didn't go and play golf or something. I started investing, and because that's what I'm interested in. I'm interested in enabling people, and that's also why I'm interested in India, because the potential is so massive. I mean, there's an enormous amount that can be done, and I'm just very privileged that I can be part of that.
Dr. Jerome Booth wears many hats as an economist, entrepreneur, investor, and an expert in emerging markets. In 2013, he retired from Ashmore Group, a world-renowned asset management company he helped establish in 1999. After this, he founded New Sparta Limited, an investment firm through which he manages his more active investments today. These include a range of investments across UK and now, through Newcall, in India. You mentioned that you approach funding more through a debt route rather than an equity route. One trend that is happening over here, Jerome, is that a lot of ideas are getting funded. VCs are getting Series A, Series B, Series C, and then beyond a point, it's only about scaling up a business to get the next round of funding, or it's a virtuous cycle. You don't know whether it's a chicken and egg. You don't know which comes first. But somewhere, you get a sense that the entrepreneur who started with a great idea has perhaps, in such a big rush, become so big or scaled up so much that he has lost touch with his original idea, or it's something which is completely looking different.
Just sort of squeezed out.
Yeah. So I mean, is that a risk that a lot of entrepreneurs face, and would you advise them against something like that? What's the way out?
Look, I mean, sometimes you've really got no choice. And when you say yes, I finance by debt, but it's debt from me, which is very different. There are dangers with debt as well. I mean, the danger is that if you miss some revenue targets, then effectively the debt can wipe out the whole of the equity structure. So it's got its own dangers. But what I do think is important that you come up with a structure that incentivizes the people who have got the real passion and are doing a lot of the work, and that's the important issue. However, the details of the capital structure work. That's the end goal.
You also invested in films and the film distribution business. So, are you going to invest in Bollywood, for instance? I mean, what is your two bits on that?
Well, most of my film businesses are in the UK. So, will I invest in Bollywood? Never say never. I'm not there yet, to put it that way. I'm intrigued. I'm particularly intrigued by the distribution system here, because I mean, in the UK, in the United States, distribution is 25% of the revenue is from the cinema, whereas here it's almost 100%, a little bit of TV, which is fascinating. So I think that's one of the things. We've got, with Ozone, we've got the ability now to download films onto mobile. You can go into some other sites and download it. So we're starting to get, if you like, into film distribution that way in India. But I haven't sort of done any big Bollywood projects. But what's interesting about the film business The economics are fascinating, which is kind of why
it's very grey.
Well, there are lots. Yes, grey is one word for it. The capital structure is very complex, and it seems to be a lot of people who invest in films who never get any of their money back. 89% of films which are made don't recover their costs. So it's a high risk area, and you have some cases where people invest in the equity of a film, which is at the bottom of the capital structure, and it's mathematically impossible for them ever to get their money back because 110% of the revenue goes to other people first.
Sure.
There's a lot of distortion through tax incentives, and a lot of that's sort of clearing away in the UK where I'm mainly operating. So I've also worked out that really you need scale and integration, which is why I bought 4 film businesses. We have got Icon, the second largest independent film distributor in the UK. We've also got New Sparta Films, which has got a slate of businesses and actually now has full production capacity. So we don't need a co-producer. And we've got films. We've got Miss You're Ready with Drew Barrymore coming out next month. We've got some major films. I mean, that film I financed 100%, so it's definitely my film. But if you finance a film 100%, you then don't sort of get the dregs at the bottom. You actually get all the upside as well. And I think, that's a really different type of model. Sure. And at the moment it's quite a small division of what I do, but if I can demonstrate to a few investors that I can actually give them money back, something quite radical in the film business, then obviously I can scale it up.
So there is a lot of parallels between that and what's happening in India. But I'm going to ask you one last question.
Yeah.
You worn many hats. I started by saying that. You were a fund manager, you were an economist,
yes.
you were an entrepreneur, you are an investor.
Yes.
How has an economist become an investor? Because this is there are two strains that seldom meet. So
I'm also a double bass player. You missed that one.
Okay.
And I chair a university.
I missed that one. But really, it is two twines that go parallelly and seldom come together. So what has the mentorship been like for you?
Do you know, I have a very good friend who is quite old now, and he said he's going through his 3rd retirement, by which means his 3rd phase. And he says, and it's now much more difficult because as I retire from all the different things and all the different hats, I become less useful to the others. And I do have what you call a portfolio career. I sit on lots of charitable boards as well. I'm chairman of the Britten Symphonia. I'm chair of the Fitzwilliam Museum Development Trust, which is a museum in Cambridge, as well as chairman of Anglia Ruskin University. And a lot of these different sectors, education, the arts, and of course the different sectors in business, I can make connections.
Yeah.
So I'm interested, in things like healthcare because the university I chair is very big in healthcare.
Sure.
I'm interested in how the economics of health, maybe not necessarily kind of to the fore in some of the policy, and I can make connections, and I think that's. I suppose I've got a low boredom threshold or something. I don't know, but I'm interested intellectually in a range of things.
It's connecting the dots, and it sounds like great fun.
I'm having a blast. I do encourage other people, if they're lucky enough to get my situation and make some money, not to go to the beach, but to actually
have more fun with it.
And use the money. It's there. It's a responsibility. And I think it's a great privilege to have it, but it comes with that responsibility of trying to employ people, trying to enable others, and that gives me a huge pleasure, and I'm very lucky.
Enjoy this conversation tremendously, Jerome. Thanks so much for joining.
Thank you.